SVN Capital is a concentrated portfolio of global equities aiming to double investor capital over a business cycle. It's a value-oriented fund with a quality overlay. With a focus primarily on compounders, I launched SVN Capital in 2018, offering investment opportunities through a private partnership as well as a separately managed account. In investing, there are three discernible edges. Number one is information edge, where you turn over as many rocks as possible. In this age where information abounds, how you interpret that information is key. Number two is analytical edge. While it used to be true advantage in the past, with the prevalence of internet, this edge has lost its edge, pun intended. In my estimation, the real advantage lies in behavioral edge, patient long-term holding. In fact, the average holding period of a U.S. stock is now down to 5.5 months from 7 years in the 1940s. As Ben Graham taught us, the market is a voting machine in the short term, but a weighing machine in the long term. This edge entails taking a 5 to 7 to 10-year approach to investing, while many in the market are focused on just the next quarter or even the next year. I believe investing is an individual sport, and to a large extent, risks that an individual takes are driven by that individual's past. I was born and raised in India in a conservative, middle-class South Indian family. That upbringing drives how much risk I'm willing to take even in the portfolio today. I don't short, nor do I use any leverage. I don't use any derivatives, nor do I hedge the portfolio in any other way. On the wall in my office is the famous scene from the great Hindu scripture, the Bhagavad Gita. Upon seeing his cousins, uncles, and friends on the other side of the battlefield, Arjuna the warrior kneels in front of Lord Krishna, refusing to fight, at which point Krishna tells him, "Focus on what you control, which is your effort and dedication. You can't control the outcome." I try to focus on what I can control, which is, number one, continue to learn more about the businesses and management teams, and number two, remain patient. As a professionally trained accountant, I used to focus more on the quantitative analysis of investments. While that continues to be important, I find myself operating more and more like an investigative reporter, deeper research and improved writing. What I look for in an investment are affirmative answers to the following four questions. Number one, do I understand the business? Number two, is it a high quality business? Number three, is it run by management teams with talent and integrity? Number four, is it available at a reasonable valuation? I find ideas through extensive reading, thinking, talking to a worldwide network of other managers and investors that I have developed over my professional career. I run a number of screens. One in particular that I like is cash return on invested capital. While SVN's strategy is unconstrained geographically, I incorporate a number of quantitative and qualitative filters in my search process. Accounting is the language of business. Given my academic background, I believe I understand that language well. Therefore, I'm looking in places where I can understand that language, i.e. countries where either US GAAP or IFRS is the local language of business. Additionally, I want the local corporate governance and IP laws comparable to that of the US. Finally, I'd like the companies to file their financials in English. With these additional constraints, I tend to look for opportunities in North America, Europe, developed Asia, Australia, and New Zealand. The portfolio consists of high-quality businesses, which means, number one, higher than average returns on capital. Number two, reinvestment of such returns. We know if there is one constant in business, it's reversion to mean. That is, if a certain business generates a high return on capital, it automatically attracts competition, and over time, such high returns will be arbitraged away. So I spend a lot of time understanding what that secret sauce is that allows the business to generate such high returns, and if it's likely to continue to do so. I look for healthy reinvestment opportunities in the businesses in our portfolio. Why? If you doubled a penny every day for the next 30 days, what's the balance? You'll actually have 10.8 million on day number 30. The enormity of the resulting number highlights a couple of key points. Number one, the power of compounding, and number two, the power of reinvestment. After all, the above exercise entails reinvesting 100% of the earnings. While that may not be feasible in many businesses, it highlights the possibility of creating enormous wealth by reinvesting. Since my ability to compound capital is generally greater when an effective reinvestment program is at work than when managers simply pay out the excesses, either in the form of dividends or share repurchases, I strongly favor businesses that have this attractive reinvestment opportunity. SVN Capital is a concentrated, long-only global fund with 10 to 15 stocks. There are both empirical evidence and practical limitations as to why. In any dynamic system, the more moving parts lead to more opportunities for things to go wrong. With my investment portfolio, the fewer decisions I make, the less exposure to making mistakes. While my alma mater, the University of Chicago, is the citadel of capital asset pricing model and the need for a well-diversified portfolio, I believe that my portfolio needs to be different from the market if my objective is to double the capital over a business cycle. Joel Greenblatt, in his wonderful book, You Can Be a Stock Market Genius, said that you get 81% of the benefits of diversification with just 8 stocks, and 93% with 16 stocks, and so on. As a practical matter, with a one-man investment committee, there is a limit to how many businesses I can truly spend quality time on. Fortunately, I just need a few businesses in a year to create wealth over time. Alignment of interest is an important strand that runs through all aspects of SVN Capital. I look for management teams to be aligned with me as a shareholder by having skin in the game, to be aligned with the company's employees and other constituents by having a reasonable compensation and incentive structure. I'm well aligned with my investors through a very equitable fee structure. In the partnership, there is no management fee. There is only a performance fee of 25% over 5% with a high watermark. Also, majority of my liquid net worth is invested alongside my investors. I look for investors with a well-aligned, long time horizon.